Rennie. He's Westpac Banking Corp's chief currency strategist in Sydney. Robert, thank you very much indeed for joining us. Well, you know, you got this data. Were you surprised by the strength of inflation?
Yeah, look, we were, and I think the market generally was. I think most in the market were probably expecting somewhere in the region of 0.7, 0.8. Instead of that, we got 0.9s across the board. The mix of inflation does feel slightly strange. We saw, for instance, strength in clothing and footwear in a period where in Australia we're actually seeing significant discounting by the retailers. So I guess there's some question marks around the makeup of the data. But we're getting to an uncomfortable point. We've now had 2.9s in a row. That's uncomfortable for the RBA. In the last minutes, the RBA noted that this CPI release would be important in setting the outlook for inflation. So we certainly have an interesting backdrop for next week's RBA meeting. And I certainly think the level of debate has probably, given today's data, is probably going to rise as a result.
Yeah, I mean, what you're saying here is, before it, I think there was a 48% chance that the next move by the Reserve Bank was for a rate cut. I think that's dropped to 16% with the prospects of a rate hike pretty much odds on.
Yeah, look, it's still our view that we expect to see the next move in rates to be a cut. Obviously, that's not going to be for some time. We'd look forward to retail sales. For instance, next week, June's retail sales. We've already had a number of retailers come out here and significantly downgrade their data, pointing particularly to very weak activity through the June and July period, which is our heavy discounting period. So I think there's reasons to expect weakness in retail sales. Business and consumer sentiment has been weakening. That's due out the week after. Also employment too. I think there's a number of reasons for the RBA to look to the data, and certainly RBA Governor Stevens yesterday talked particularly towards the weakness that we're seeing here in domestic consumption. So I think there's good reasons to hold back, but I certainly think the level of debate within the RBA will have increased as a result of this morning's much higher than expected CPI release.
Does it seem that at the moment it is the mining side of things there which are really, well, dictating terms as to what happens with monetary policy?
Look, I think that's an important point to bear in mind. Yes, we've got record terms of trade, and yes, the investment pipeline here in Australia is absolutely staggering. But at the end of the day, one thing that we have to remember is that mining would employ about 2% of the Australian workforce. If you throw in wider mining-related construction, it's maybe about 5 to 7%. So, mining is the smaller part of employment. It's clearly the lion's share of the investment pipeline.